Hi guys, we hope you're doing well, and in today's quick video we'll cover the top 5 questions to ask when vetting a sponsor. Of course, you can go in depth and ask over 100 questions over a number of conversations, and if you're interested in learning more, feel free to connect with us via the link below. But for today's video we'll focus on the top 5. Number 1 is understanding their background. Are they completely new to real estate? Are they new to the asset class that you're looking to invest in? And if that's the case, you probably don't want to work with someone who is just getting their feet wet in real estate, but perhaps they have other, let's just say you're looking at a multifamily asset, perhaps they have other relevant real estate background that they're bringing to the table. Perhaps they have a successful track record of running businesses or departments within larger companies. And of course, it's important to understand who else is on the general partnership or on the management team, because that person or these people should have relevant background in the event the sponsor you're talking with does not. When doing diligence, of course, we always recommend that you run background checks just so you can trust, verify, and avoid any negative surprises. And you can also ask for references. Now, just like in a job interview, people are more likely to give you references from people who had positive experience. One way you can dig deeper in that aspect is perhaps ask for references from past LPs who didn't necessarily continue to reinvest, and there could be reasons for that as well, like timing or the LP's desire to diversify across multiple sponsors, but that may be one way to peel the onion deeper on those references. Number 2, we mentioned the management team. You want to understand who the managing members are. Ideally, you want to have at least 3, and to the extent, God forbid, something happens to the sponsor you're speaking with or one of those 3 key sponsors, there are 2 other people who can remain actively engaged in the business and carry through with the business plan. Otherwise, if you have 1 or 2 and say one goes on vacation or God forbid, is no longer able to manage, then you're left with no staff or nominal management staff. On the flip side, you don't want to have too many GPs or management team members, because then it's very difficult to figure out who is the decision maker, and that's what you really need to hone in on. If the property is larger, okay, up to 7 people may be fine as long as they have their duties equally divided, and naturally with larger properties there is a little bit more work involved. But once you start exceeding the 7-figure number in terms of management team members, the reality is that it's probably a handful, about 3 or so, that are making the key decisions. Number 3, are the management team members contributing to the deal that you're underwriting? How much are they investing in the deal? Do they have skin in the game? Are they signing on the loan? Are they guaranteeing the loan? You really want to ensure that they're vested in the business beyond just the marketing spiel. Number 4, what are their communications? How frequently do they communicate? How do they communicate? Phone, email, text? You can ask for a sample of their monthly or quarterly investor newsletters or the webinars that they conduct with their investors. That would be a good way for you to gauge how do they communicate, how detailed they are, and if that's in line with your expectations and your comfort level. And number 5 is the history of capital calls. To the extent they've had any, if they haven't, you may want to inquire whether they've paused distributions in the past, what drove that, what happened, how did they manage through it, and if they have had neither, you can always inquire about past mistakes, failures, or as we'd like to call them, seminars. In this business, inevitably nothing goes 100% perfectly or 100% as planned. There are always exogenous events that may happen, like market or hurricane or or something operationally transpires at the property that you didn't foresee. So you want to know how they addressed that issue, how they pivoted, and how they navigated. So that's it for today. We hope you found today's video helpful, and we'll see you at the next one. And if you enjoyed the content, please like, share, and subscribe. Thank you.